Hi guys, Assalamualaikum. Now I would like to talk about history and development of accounting and accounting theory. The issue is the development of conceptual framework. For introduction, accounting has been built up thousands of years before. During that time, people were doing accounting for their own needs. Accounting no longer worked for personal needs with the change of time. People need common standards for stakeholders and business to use. Certain international standards have been developed, such as IFRS and FRS. These standards are developed by International Accounting Standard Boards, the Financial Accounting Standard Boards, and Accounting Standard Boards. The conceptual accounting framework will be needed to establish accounting standard. A conceptual framework will form theoretical basis, which events should be accounted for, how they should be measured, and how they should be communicated to user. Main reason for developing an agreed conceptual framework are that it provides a framework for setting accounting standards, a basis for resolving accounting disputes, fundamental principle which they do not have to be repeated in accounting standard. The development of conceptual framework is influenced by four key issues, which are: first, principle-based and rule-based standard setting; next, information for decision-making, decision theory approach; and last one is users of financial information. The first one, principle-based and rule-based standard setting. Conceptual frameworks have an important role to play in the standard setting process, since they provide a basis for the creation of a body coherent standard based on consistent principle. Principle-based standards derive from conceptual framework that provide a broad principles to be adopted within standard, and also require professional and managerial judgment in relevance to particular transaction and event. IAS is solely based on principle and offer more general guidance. Rule-based standards are generally a list of detailed rules that must follow when preparing financial statement. US GAAP is fully rule-based and lay down very detailed and correct rules for every particular accounting problems. Both principle-based and rule-based standards aim to provide information that helps user in making economic decisions. Rule-based accounting standards provide extremely detailed rules that attempt to contemplate virtually every application of the standard, and it makes it more difficult for prepare and auditor to step back and determine whether overall effect is consistent within the objective of standard. The ideal accounting standard is one that is principle-based and requires financial reporting to represent the economic content, not nature, of the transaction. Principle-based approach help protect the long-term interests of investors and other stakeholders. Next, information for decision making. Stewardship function is important in accounting. Therefore, standard setters cannot ignore incentive effect of financial accounting information and the consequence for decision making. Users of financial information are greatly expanded to include all resource providers, recipients of goods and services, and parties performing a review or oversight function. It helps them to assess how effectively management that has fulfilled their stewardship rules. Accounting information is seen as input data for the prediction models of users. Accounting information is used by investors to value the firm and make decisions. Stewardship is concerned mainly with the past in order to assess what has been accomplished and how the entity prediction look towards the future. The purpose of stewardship is to provide information on the past at level of detail measures the performance, also providing information on how organization has been prepared for the future. Stewardship influences the utility of the decision in development of the conceptual framework.
The next issue is the decision theory approach. In this issue, which conceptual framework of accounting are being used to create a consistent set of rules and standards can be used by auditor, accountant, manager, analyst, banker, and investor in making a decision. It is widely accepted that accounting data are for decision-making or evaluative purpose concerning a specific entity. Moreover, the shareholder would like to know what the managers have done with the economic resources that have been entrusted to them. It is because the information will be used by the shareholder to evaluate the performance of the manager and the company to make a decision relating to the sustainability and future of the company. However, information for decision making is not only implied for the need of stewardship and accountability, but it also includes creditor, government institution and its agency, employee, shareholder, debenture holder, supplier, customer, competitor and vendor. Also, accounting information can be seen as input data for prediction model of the user. The accounting information needed is not only based on the past event to assess what has been accomplished but also the need for prediction of the future. For many accountants, the current value is the most relevant value for decision making because the present is closer to the future and still grounded in reality. The decision theory process is presented below. As we can see, the arrow indicates the output of the theory, system or model. It consists the process by which the output of the accounting system provides inputs to the decision model of a user. Financial information may have a wider range of users and have different information needs. Therefore, to make the information beneficial to other users in making a decision, the output of the accounting system needs to be evaluated. The last issue is user of financial information. Most of the information contained in the accounting system is endogenous to the firm, but some pieces of information are the consequence of the mixing of endogenous and exogenous information. According to the statement of accounting concept, there are three categories of group. The first one is resource provider, which those who may be compensated either directly or indirectly for the resource they provide. It includes employee, lender, creditor, and supplier. Second, recipient of goods and service are those who consume or otherwise benefit from the goods and service provided by the reporting entity. It comprises customer and beneficiaries. Third, parties performing a review or oversight function which members of this group like parliament, government, and regulatory agency tend to have indirect or derived interest in general purpose financial reports since they advise or represent those who have direct interest. In conclusion, accounting is then just the process of keeping debits and credits on a ledger. Besides that, accountants translate the complexity of finance into information that the public can understand. In 1973, FASB Conceptual Framework to develop a sound theoretical basis for the development of accounting standard. With a sound, the FASB can issue consistent and useful standard. The framework also increases financial statement user understanding of and confidence in financial reporting and makes it easier to compare different company financial statements. Thank you.